So we're in London, and I have to start with a question on the state of play here. How much has your optimism on and commitment to London and the UK more widely waned since Brexit and the 3 years of political mayhem since?
First of all, we love being here. I mean, this is a fabulous city. It's a global melting pot. It's got unbelievable talent and stuff like that. So we're devoted to London. And obviously, the British people are going to decide what form Brexit takes. And, the negotiations, even after Brexit, I think it'd be very tough and complicated. But we're devoted here. I think over time, Brexit will cause, a diminishing of the financial center here. It'll still be a financial center, but not quite the powerhouse that it was.
Switching focus to earnings and JPMorgan more broadly, your recent revenues rose 8% year over year. Most of your rivals were flat. In fact, that kind of continued a theme of the last few years of your outperformance. Is it harder to make those market share gains moving forward?
Yeah, I think I've said the competition is fully back. Remember, revenues for one quarter depend on a lot of things you've done over the last years, a little luck, literally the weather sometimes. But I think you have major competitors everywhere. I think it's a good thing. People competing in banking, in commercial banking, investment banking, globally, credit card. So yeah, I think it's going to be hard to eke out gains, but I hope we can try to do that.
One theme from the earnings call, I think, was consumer in the US seems strong, perhaps corporate optimism less so. Overall, I felt perhaps your theme on the call was more bearish than you've been recently. Is that fair?
Yeah, a little bit. So the consumer, 70% of GDP is still quite strong. Their balance sheet, their sentiment, their income, their wages are going up. Housing's in short supply. Credit is quite good. The business side, business sentiment has dropped dramatically, confidence. CapEx has dropped. And a lot of it is around this kind of these very complex geopolitical issues, and in particular trade. And so I think trade has made a lot of CEOs question when they should invest, how they should invest, and slowed it down, and probably slowed down the economy a little bit. But that doesn't mean we're going to go into a recession. It just may very well mean a slowdown.
China has been in the news, of course, recently, whether it's trade or other actions. To what extent are some of their actions, whether that is limiting democracy in Hong Kong or other things, bad enough that US companies should be criticized for making profits in China?
Well, I don't think they should be criticized for making profits. I think there were legitimate issues, but for the better part of 10 or 20 years, American companies, the American government didn't pay that much attention to all the things taking place in China. This administration came out and said these issues have to be resolved. The business community supports that. So there's nothing wrong with doing business in China. These are trade disputes that we hope get resolved in a way that's good for everybody. But I do think there's legitimate criticism. You should have done it sooner. That's probably true.
As it goes with Hong Kong, clearly there's been a lot of debate around the MBA's business there. If your employees spoke out, they're based in Hong Kong, spoke out either in favor or against the protests there, would that be something you wouldn't mind them doing?
Well, it's not up to me, okay? So the citizens of Hong Kong can do what the citizens do. We don't want them to do it on behalf of JPMorgan. So, but this issue is serious. So, I mean, number one, we want a peaceful resolution there. We think collaboration, resolution, peace is a very good thing. But it does point out some very differences between the Chinese system, which is, state capitalism and censorship, and the American system. And those don't have to end up in a Cold War, but they do cause a tremendous amount of complexity for in particular, American business and trade policy and other related policies.
In terms of the Fed, you said 70% of the economy is strong, unemployment's very low, equity markets at record high. Do you agree with the 3 rate cuts that the Fed has done this year?
Yeah, I think so. I think, look, the Fed, they're very smart people trying to act very wisely. They also can't completely predict the future. But the fact is the American economy is still growing at 2% or thereabout. They dropped rates a little bit. In the past, there were examples where dropping rates a little bit was kind of insurance for extending the recession. Inflation is actually rather low, 1.3 or 1.5%. So I'll leave the specific judgments to them. But I think they are pretty wise people. And they probably pausing a little bit. It may not be a bad idea either.
When we consider some of the factors we've seen in the interest rate markets of late, the spike in the repo rate, the fact that after the September rate cut, the following week, LIBOR, SOFR, and the effective fund rates all actually increased initially before they then fell. Has the Fed lost some of its power, some of its control?
No. Look, the Fed is a very powerful institution. They've got a lot of tools at their disposal, including their voice, their capability, their ability to act strong and tough in multiple ways, financing markets, rates, et cetera. That I think the technical thing about rates going up, they missed. There are issues there, but they're kind of technical. What happened to reserve balance sheets and banks' ability to finance repo and stuff like that? They are aware of the issues. I think there should be some permanent fixes, not just temporary fixes, but let them work on it a little bit. They'll finish their deliberations and decide. I think it's very important for the American public to realize this is not about what's good for a bank. So it's not about regulations. This is good about proper functioning markets. Whether they do change it or not for JPMorgan, we're fine either way. I think you're going to see issues like this happen increasingly if we're not careful because of certain constraints that were put in place.
I want to move on and talk about WeWork. We were just discussing it a little bit before the interview started. Firstly, it had a $47 billion valuation, there or thereabouts, whatever the precise number was. It now has around an $8 billion valuation. How many more companies are out there like that in the private market? Is there a bubble in that part of the market?
Yeah, well, a couple of things here. First of all, I don't agree it had a $47 billion valuation, because I would never say that because someone paid the last price, that's worth that price.
But it's fallen significantly.
I know, but that's not price discovery. Price discovery is when a lot of smart people around the world, knowing all the facts, can kind of buy and sell all the time. So I just think I'd be very cautious. They're all different. Some of these companies have unbelievable technology. Some are venture. They may work or not work. Some are, trying to grow so fast that they cause cash problems for themselves, but they have a good underlying model. So they're all different. But I think there are lessons to be learned about these valuations and how you go public and how you treat the public shareholder, et cetera. And so those lessons should be learned by everybody who wants to go public.
Do you feel sorry for Adam Neiman in all this?
I'm not going to go there. I don't know.
But he was advised by some, including your bank, that a higher valuation than has currently been achieved was possible. So is there some level to which he was misled by some advisors, like JPMorgan and Goldman Sachs?
You don't know the private advice we gave him or the company. And when it became a problem, JPMorgan did what it always did. In fact, I got a letter from someone saying, when we were being criticized a little bit, saying, no, you did exactly what JPMorgan does when a client has a problem. You rolled up your sleeves and you try to find a solution. At the end of the day, we did. We offered them, a bought, fully financed kind of deal that can get them to the next stage of their life. And I think they'll have a future life. We want them to do that. We don't want to lay off 14,000 people, have bankruptcy or something like that. So a lot of lessons to be learned on the way by everybody involved. And so, and I've learned a few myself, yeah.
What have you learned in particular?
Well, some we knew before, but I think companies going public should have proper corporate governance before they file an S1. You should have your independent board members before an S1. You have to make sure you take a lot of time to go through how you disclose this stuff to the public and be responsive to shareholders. Shareholders should be treated like partners. They shouldn't be treated like, what's the highest price I can get? And an investment bank can guide on price, but at the end of the day, price discovery is when you get hundreds of people in a room like this, and smart people with different ways of analyzing things, but quite intent, going through the company, looking at its prospects, its future, its discounted cash flows, its growth prospects, and that is real price discovery. And a bank should help guide that, but just because someone says it's worth something different, that does not actually make that true.
So do you pledge here and now that you won't put your company's name on another S1 with that level of corporate governance questions hanging over?
I would never make a pledge to you or anybody else like that. But I don't make pledges. I'm going to do the best I can every time I can. So,
but you said it should have had better corporate governance. All male board directors. You talk passionately yourself about that not being the case at JPMorgan. The founder owned buildings where the company was a tenant. The founder had multiple person loans against its own.
So a lot of those things were prior. Some of those things were changed going forward. If I remember correctly, the company promised to put a female board member. They had a female board member.
But the first S1
they just got from Harvard Business School. No, I understand that, but you don't know all the conversations that took place on the first S1.
Then you just said these things should happen before the S1.
I said one of the lessons is they should happen.
So going forward, is that something you don't want to put JPMorgan's name on the S1?
I would never tell you something like that. We'll decide on every specific case when there's a specific case. And if we don't want to do business with a client, we can not do business with them. We can give them advice that they don't take and still do business with them. And on occasion we give them advice and they don't take it, we will not do business. But I'm not going to go through the details of what we did in this particular one. I do think we helped WeWork get to a proper conclusion, which I think is very important. I really would have been bothered and upset mostly by if that company had been a failure and had a chance to succeed, and now it has a chance to succeed.
Moving on to markets more broadly, Jamie. Lots of headwinds out there from trade and others. Record all-time highs in the market, very low volatility. Is there a bit of complacency, do you think?
I don't know. Markets, guessing the market and guessing the is really hard to do. I think there are a lot of valuable companies. Rates are very low. It looks like the stock markets are forecasting a pretty rosy outcome, and the bond market, it's hard to say what it's forecasting because it's a lot of bonds being bought by central banks. So it's hard to tell what that really means when rates are this low in an environment which is not so bad.
In terms of your forecasts for the year ahead, a lot of analysts have EPS growth, but part of that is because they expect buybacks to continue. Right. Are we at the point in the cycle with the rate curve as it is where it's plausible that 2020 net income could be lower than 2019 net income?
Of course. That's always plausible because I don't know what 2020 is going to be. If you have a recession, yeah. And obviously we're affected by interest rates, credit, things around the world. Believe it or not, for your viewing public, I don't worry as much about that as opposed to building the business. Hire great people, build technology, have great products and services, admit your mistakes, work, fix them, move on, and that will be what it is. I actually can't affect 2020 very much even today. And if I could, only by doing probably some pretty stupid stuff.
Should people expect the pace of buybacks to slow up a little bit with your share price at a kind of record valuation since the crisis, a record valuation gap compared to your rivals? Is the pace of buybacks going to slow down now?
I can't answer that question. We always going forward. We always look at that. So I'm not going to tell you what we're going to look at and not look at because it's not fair disclosure. Mm-hmm. But I understand the point. But I think even more important, I'd rather use our capital to grow our business. And the constraints on that are multitude about how you can use capital in a bank. But if I had my druthers, I wouldn't do any buybacks at all. I'd be building my business. If I had my complete druthers, I wouldn't have a dividend.
Mm-hmm. I want to talk about tech and banking. There's been a couple of high-profile partnerships of late. Facebook has explored partnerships with a number of banking companies, mm-hmm. finance companies. Most high-profile, Apple and Goldman Sachs. Does a partnership like that make sense for JPMorgan?
Well, we do have many partnerships. Obviously, we have various forms of partnership with Visa and MasterCard. We've got branded cards in Southwest, United Airlines, who've been fairly great partners over the years. So but a company like Facebook, a pure tech company, a company like Apple? I would explore and entertain anything, and the facts will tell. So you can have a relationship which goes from white labeling, bank as a service, all the way to you're their bank or something like that. And there might be something that continue, which we might consider. But I can't tell you right now because I don't know what that might be. Do you think in 10 years' time a company like Facebook is as big a competitor to JPMorgan as Wells Fargo and Bank of America are today? It could be, but not in the form they're in. I mean, it'd be very hard for them to be a bank holding company. So they would have to find ways to do part of banking. But people do that. Do banking as a marketplace, they do banking as a service. They might find ways to incorporate banking in a way that competes with us. And so, I applaud capitalism, I applaud competition, and I do expect some of that stuff to be coming. So I tell people don't get complacent. We have some great current competitors, and we have some great competitors we don't know about yet. And so we better keep our eye on all of them. You mentioned recently that Libra was a neat idea that won't happen, I think were your words. Mark Zuckerberg said in a hearing in Congress, quote, "If America doesn't innovate, our financial leadership is not guaranteed." Are JPMorgan not capable of innovating themselves? Is that what he was implying? No, we do a tremendous amount. First, I agree with him that the American banks are preeminent around the world, and we need to compete with the Chinese. I totally agree with that concept. And I think Libra, I said it was a neat concept because payment systems, if you have a problem you want to fix like cross-border transfer, I agree with him. I just don't think that in this day and age it'll be them. Mm-hmm. So and that was not meant as an insult or anything like that. That's my own personal belief. So we already have a JPMorgan coin, a tokenized blockchain-based coin where we can move money and stuff like that. We haven't opened it up to a lot of people yet. We haven't made it consumer yet. But banks built a real-time P2P system called Zelle. Banks built a real-time wholesale payment system called RTP through the clearinghouse organization. So we have to innovate to win. I totally agree with that concept. And I think there are fintech-type solutions for specific problems that Libra was intended to go after, that someone's going to do, by the way. On the healthcare partnership that you have with Berkshire and Amazon, it's going to start rolling out to your employees in Arizona and Ohio imminently. Is that something that's just going to work for your employees and for JPMorgan? Or is it something that, if it works well, could be rolled out to help all of America? Yeah, so our job is to have better outcomes for our employees. That better outcomes should be they live longer, they get better medicine, lower costs, stuff like that, higher satisfaction. And so what we decided to do is have some very smart people, intensively involved in data analytics, testing certain things, modifying certain things. So the program you're mentioning, there are two. One is making sure people have primary care. What's the long-term effect on chronic health, outcomes, et cetera. with transparency. Another one is, high deductible plans have been really hard for people. So we're we're doing a low deductible plan that our employees might prefer, and they might actually buy more preventive medicine that way, and we're going to find out. Whatever we learn, we intend to share with the world. It was never meant to be a for-profit type of thing, even though it's a corporation. And, Amazon's doing its own thing, and Berkshire can do its own thing. But, hopefully we'll learn something here, and we'll share it. And we all should acknowledge there's a lot of things that could be improved about our healthcare system. We have the best in the world, doctors, pharma, surgeons, hospitals, you name it. We also have some of the worst. 40 million uninsured, very high cost structures, too much fraud, administrative cost, too lack of transparency, too lack of preventive medicine. We don't even teach, for the most part, health and wellness in K-12, like how to eat properly and how to get exercise. So, to me, there are a lot of things we can do to make America a far healthier society and fix our healthcare system. Keep the best and fix the part that's not working well.
I wanted to ask you what you made of the fact that one of your former lieutenants is now, for the first time, a direct rival of yours, Charlie Scharf, of course, at Wells Fargo. What do you make of that?
Just got off the phone with Charlie, and I have enormous respect for Charlie, and I wish him the best. I think he'll do a great job there. And look, I'm proud of our people. We have two great co-presidents in Gordon Smith and Daniel Pinto. We've got other potential successors, and we've had people left who are also doing quite well. So I'm proud of that.
I mean, to that extent, I was going to say, are you proud of the fact that you've created somewhat of a CEO factory? You mentioned some of the others outside, and the talent coming up. How do you manage that?
Yeah. Listen, first of all, it doesn't mean everyone went to JPMorgan is good. So that notion is, we have our things we haven't always done that well either. But I'm proud of it. Someone told me a long time, Ron Daniel ran McKinsey, that if you become a really good company, that's really good news. But one of the negatives, if people think you're a really good company, is they start to recruit your people. And that's kind of the cost of doing business. But the talent we have is extraordinary. I mean, literally extraordinary. You've met a lot of them, and I'm just very proud of them. And I get to travel the world with them, and I'm kind of shocked at their capabilities and what they can do. And
I want to talk about some of those individuals. You shuffled the pack recently internally, and most notably switched roles between Jen Piepzak and Marianne Lake, to the extent that the marketplace now suggests in the 3 to 5 year timeline that you've given yourself that they're the two frontrunners. Is that fair?
Well, I would never acknowledge who's a frontrunner or not, but it's very possible a woman will end up running this company sometime in the future.
Okay, fair enough.
But remember, this is a board-level decision, so it isn't like I'm going to decide. And also, the board wants to see people move around a little bit, see people in different jobs, get different experiences. So when you do take a bigger job or my job, that you have fairly broad experience.